Adobe recently announced earnings for their third quarter of fiscal year 2023. Their stock is up 50% year to date compared to the market, which is only up 11%. And over the last 12 months, their stock is up 77%, while the rest of the market is only up 16%. So they're obviously producing a really good return for their investors. And so in this video, I'm going to look into some of the recent news that came out surrounding Adobe's stock. I'm going to review their business model, and then I'm going to look into their financial statements so we can understand their business from a qualitative and quantitative perspective. And then lastly, I'm going to use a discounted cash flow model to figure out the intrinsic value per share for their company. So right here, this article is titled, "Will Adobe be a $1 trillion stock by 2030? Some key points include that Adobe would have to double in value approximately twice in order to reach $1 trillion. So basically they'd have to quadruple in value. And revenue and income growth was surprisingly slow this fiscal year. Right here, they point out that as a result of the greater interest that investors are taking in AI, the stock is up more than 60% since the beginning of the year. The increase has taken Adobe's market cap to $240 billion. And so the main question is, will Adobe be able to reach a market cap of $1 trillion by 2030? They talk about the path to 1 trillion here. Basically, they would have to quadruple in value, or basically rise at 23% compounded annually in order to grow to 1 trillion before 2030. During the previous 12 months, the stock price rose by almost 80%, but they were coming out of a recession in the 2008-2009 financial crisis. So if you go back 5 years, the stock has risen by only 106%, a rate that would not take Adobe stock to 1 trillion if that was how fast they grew for the next 5 years. But if you go back 7 years, the rate of increase for Adobe was 400%, which would be fast enough for them to get to a $1 trillion market cap by 2030. They point out right here that ultimately past growth is not a good indication of future growth, and we can see that as a result of recent events. Different investments in the tech industry could increase Adobe's share price a lot faster. They're pointing out right here that one of Adobe's latest products, Adobe Firefly, its generative AI product offering features like photorealistic images, text effects, and 3D enhancements, is really popular in taking their creative applications to the next level. Also, the enhancement was supercharged by a partnership with NVIDIA, and now Adobe is able to leverage the power of NVIDIA's GPUs in the creative process. For the first 9 months of fiscal year 2023, ended September 1st, Adobe had revenue of $14 billion, which is up 10% year over year. And amid rising expenses, net income for the first 3 quarters matched the 10% increase as it came in at around $3.9 billion. All in all, the article concludes with saying that given the current growth rates, Adobe is unlikely to achieve a $1 trillion market cap by 2030. So it'll be interesting to see if this article is actually correct about Adobe and whether or not Adobe will be able to increase their growth rate in order to basically quadruple their share price and their market cap by 2030. So right here, we have their financial statements, but to better understand their financial statements, I thought it would be good to talk a little bit about Adobe's business model so we can know how it is that they make money and what it is that they actually do. So basically, Adobe builds and sells software products to the private and public sector that enable users to create graphics, illustrations, and animations. Adobe sells its products using subscription-based models and pay-per-use models. Also, Adobe's most popular products include Adobe Photoshop, some of which you might have heard of, Premiere Pro, and also portable document format, which is PDF. Lastly, Adobe's end user customers, whether they're selling to businesses or the government sector or to students or universities and teachers, typically tend to be creative professionals like photographers, video editors, and graphic designers. And so right here in this income statement, we can see from their subscription-based model, revenue came out to about $4.6 billion, and in total it was around $4.8 billion, up about 10% year over year from 4.4 billion in 2022. We can see that net income came out to be about 1.4 billion, up from 1.1 billion year over year. So that's also an increase of about 27% year over year. Right here, we can see their balance sheet. Total assets are up from 27 billion to 29 billion dollars. And we can see that they have about $15 billion of shareholders' equity, and of that, their retained earnings have increased from 28 billion to 32 billion over the period. Lastly, right here, we can see their cash flow statement. Operating cash flow is up from 1.7 billion to 1.8 billion, and we can see that they repurchased common stock amounting to about $1,000 of common stock, or in other words, about 2.1 million shares of Adobe. So definitely pretty optimistic financial results. Their cash flows increased and their revenue and net income increased pretty substantially. So to calculate their intrinsic value per share, I have this discounted cash flow model here. I'm using a growth rate of 14%, and I got that from their historic growth rate. Their free cash flow in 2018 was $3.7 billion. In 2022, it was $7.4 billion. So over the last 5 years, they've had a compounded annual growth rate of around 14.5%. The weighted average cost of capital for all of the capital sitting on Adobe's balance sheet is around 7%. I got that using this calculator right here. We can see book value of equity and debt on their balance sheet is about 50-50, 14 billion and 13 billion. Their cost of debt, which is their interest rate for their most recent full year, was 2.6%. Effective tax rate 21%. Beta was 1.3, which means that they're slightly more volatile than the rest of the market. And then cost of equity came out to be 11.8%, which means that weighted average cost of capital is their equity proportion multiplied by their cost of equity plus their debt proportion multiplied by the cost of debt multiplied by the tax shield for the debt proportion, since debt is obviously not included in your tax calculation. It's a tax write-off. So right here, that means that their weighted average cost of capital comes out to 7%, and they have about 455 million shares outstanding. That means their intrinsic value per share comes out to about $689 per share, which means at the current share price, based on those metrics, they would be trading below intrinsic value per share right now because they're trading at $500 per share. So that would put them at a decent buying opportunity at the current share price. Then right here, I did a competitor or industry analysis comparing them to two of their competitors, Oracle and Google. We can see that in terms of profit margins, Adobe has a higher gross profit margin, net profit margin, and return on assets than Oracle and Google. So they're definitely dominating this chart in terms of profit margin. For return on equity, we can see that Oracle has the highest, but Oracle also carries far more debt than Adobe and Google, with a debt to equity ratio of about 88.8 compared to Adobe's 0.3 and Google's 0.1. PE ratio, Adobe is trading at more of a premium price than Oracle and Google at the moment, since they're trading at 46 times earnings. And Adobe and Google both don't pay a dividend. Only Oracle does, with a 1.28% dividend yield. So based on this, it looks like Adobe is definitely dominant in terms of financial ratios because they have the best profit margins, but they are also trading at the highest premium relative to their earnings. So it could mean that investors are pricing in a lot of the future growth that they expect from Adobe, or it could mean that Adobe is overpriced. Lastly, I wanted to compare Adobe to some of the other companies we've looked at in past videos. Adobe comes in at 9th place on our intrinsic value, on our share price compared to intrinsic value table. We can see they're trading at 73% of their estimated intrinsic value per share. Right now we can see Occidental Petroleum, ExxonMobil, AMD, ConocoPhillips, Chevron, Google, Alibaba, Albertsons, and Broadcom are the other companies we've looked at that were trading at the best share price compared to their intrinsic value per share. We can see right here that growth rate for Adobe was about 14%, not good enough to get them onto this table. AMD had the highest at 83% over the last 5 years. We can see that for dividend yield, Adobe doesn't pay a dividend, So they don't make it onto this table. Obviously, Intel had the highest dividend at 5.52% so far from what we've seen. We can see that for gross profit and net profit, Adobe is very competitive. They have the highest gross profit margin out of any company that we've looked at, with an 86% gross profit, and they have the fourth highest net profit margin at 27%. Occidental Petroleum and Broadcom had the highest net profit margins at 36%. I've now shifted the year-over-year revenue and earnings growth comparison tables to Q3. Since we're now in Q3, we can see the Q2 results right down here. I've moved the tables down slightly, and basically the whole point of this is that going forward we'll be able to recognize if there are any companies that we're analyzing that showed market dominant year-over-year revenue and earnings growth from the second quarter, the third quarter, the fourth quarter, and so on. And that might give us a better indication of the growth opportunity from these different companies. But as we can see right here, Adobe was not good enough in terms of year-over-year revenue and earnings growth in the second quarter in order to make it onto the final table. So we'll see if a 10% year-over-year revenue growth and a 27% year-over-year earnings growth is good enough to keep them on the third quarter table after it's all said and done and we've analyzed a lot of other companies going forward. But as of right now, Adobe is the first company we've looked at, so they're the only company on our list, which gives them first place by default. Lastly, right here for stock performance, we can see that over the last 5 years, Adobe is up 94%, which is not good enough to get them onto the table here. Tesla had the best return over the last 5 years at 1,144%. So based on this, it looks like Adobe is definitely very competitive in terms of profit margins and also share price compared to their current calculated intrinsic value per share, but they were not good enough to make it onto any of the other tables. In terms of compared to other companies in their industry like Oracle and Google, we can see that Adobe has the highest profit margins out of these other two companies, but they were also trading at the most expensive premium price. And based on this intrinsic value, or based on this discounted cash flow model, they were trading below intrinsic value per share. So let me know in the comment section down below what you guys think of Adobe. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.